What happens if the price of Bitcoin triples from here, Milan, to the supply? What happens? Absolutely nothing. The supply is programmed. The scarcity is insured. And Bitcoin is extremely cheap insurance on the fiat Ponzi. And you can think of it as money. You can think of it as insurance. You can think of it as asset. You can think of it as digital gold.
Discovering Bitcoin was like discovering light or discovering electricity or discovering, radio waves. I mean, it's digital scarcity. It's a way to create an entry that's scarce and immutable.
One thing I can say with 100% certainty is that fiat money is programmed to debase, and it will debase at an accelerating basis over time because of the debt spiral. So if you start with that 100% certainty, and again, very few things are 100% certainty, you ask yourself, how do I protect against that certainty? And I happen to believe Bitcoin is the best protection that man has ever designed, man or woman has ever designed. From that perspective, I believe owning zero Bitcoin is irresponsible risk management. So if you want to tell your father-in-law that he's being irresponsible by investing alongside Warren Buffett, who also has not done the work, then go ahead. But I will stand by the statement that owning zero Bitcoin is actually more risky than having a proper portfolio allocation. Every investor is different. My portfolio allocation is going to be higher than his portfolio allocation. But if you own zero, it's implying that you are 100% certain that Bitcoin cannot succeed. Then I'll ask you, so what are your assets that you're using to protect against the certainty that fiat money is debasing? And he may say gold, and I'll say that's good, but I think Bitcoin is better. And he'll say, I own real estate, and I'll say that's good, but I actually think Bitcoin is better. Both of these are what's called hard assets. And he might say, I own bonds, and I'm going to look at him square in the eyes and say, you are a fool, because you have lived the last 30 years of interest rates going down, and now they're finally ticking back up, and your bond portfolio is getting shredded. And guess what fiat money is? It's just credit. And so fiat is debasing, and all of this debt spiral, which is a certainty, is debasing because it's a fiat contract. And you ask your father-in-law this for me. If he owns any bonds, he failed mathematics, or he can own bonds and protect that by owning Bitcoin.
I mean, Buffett is an older man. He's in his 90s. I know his partner is 100. And he's never been particularly forward-thinking or particularly technologically savvy. He missed a lot of the technology trends that have taken place in the last 20 or 30 years. And he's benefited enormously from operating in a fiat system. He is a quintillionaire in the sense that by being able to get inside deals and buy things cheap, like he did in 2008 when he bought a pref in Goldman Sachs, knowing the government was going to bail it out. He lives and breathes and benefits from the system that we now have. And so, like Upton Sinclair said, it's hard to get a man to understand something that would hurt his pocketbook. And Bitcoin definitely hurts his pocketbook. And so I don't think he's taken the time to really understand it. Or if he does, it's unclear. He's a smart man. Perhaps he does understand it and he recognizes that it's an existential threat to the game that he's running into what he does. And so, either or, it doesn't matter. The allocation of zero is dead ass wrong, as Greg has pointed out. So just because a good investor, a historically good investor who operated in a fiat system doesn't support it, I don't think that alone is a reason to disqualify it as something you want to hold in your portfolio. Because, he also didn't pick up on the internet. He now owns Apple, but he was very late in buying it. He doesn't tend to be very forward thinking. So, which is not to say he's not a good investor in terms of picking up cheap assets and watching them appreciate. He's done a great job. Father-in-law has to get over. And the thing that everyone needs to fully understand is that Bitcoin is a foundational technology. And Greg, as an engineer, really understands this extremely well. Discovering Bitcoin was like discovering flight or discovering electricity or discovering, radio waves. I mean, it's digital scarcity. It's a way to create an entry that's scarce and immutable. And digital scarcity has never existed before. And immutable digital scarcity is a really important technological development, which then allows you, because of the way the system was constructed, to know that there's a limit on the amount of these digitally scarce coins that can be created, and that's 21 million. Of course, we're at 19 and change now. So because you have this true digital scarcity, these Bitcoins are actually coming to serve as money. I mean, all of those who bought Bitcoin believe that it is money. It will continue to be money, and it'll increasingly grow as money. And again, it's because it's liquid and it's socially accepted. Now, if we all didn't believe in it, it wouldn't be money. But if you look at its characteristics, and that is the non-inflationary principles, the lower stock-to-flow ratio, the immutability of it, and the ability to transact very quickly over very long time frames with instant settlement, in that respect, it's much better than gold. I mean, try to send $1 billion of gold from country A to country B. You know, you'd need a jet airliner and a security team. So try to send $1 billion of Bitcoin, you can do it in 10 minutes. So it really is, in my opinion, it is a form of digital gold, and it will ultimately surpass gold. And people need to get around the notion that you have to have something physical for that thing to be called money. In a digital world, a digitally secure token that is immutable can act as money.
I actually don't think of Bitcoin purely as money or as a digital ledger. I love it for those characteristics. I believe Bitcoin is insurance. It's credit insurance. It can be valued using credit default swaps on sovereign debtors and actually come up with an intrinsic value. Why? Because Bitcoin is anti-fiat. Bitcoin is the antithesis of what fiat money is. And therefore, if people are out buying insurance on sovereign debt because they are concerned with the ability of those debtor nations to pay back their obligations, Bitcoin can be that insurance policy, and it's even better. That insurance policy has no counterparty. I don't need to buy this insurance from a big Wall Street investment bank. I don't need to buy it from an insurance company. I can buy it as an insurance policy. I value Bitcoin as intrinsic value, as insurance. Okay, I'm a credit guy. Fiat is credit, and I want insurance on that credit. And there's a market of open market, large, sophisticated players who buy and sell insurance on sovereign nations, including, yes, sir, the United States of America. There are people that are concerned that one day the USA will not be able to pay its bills. Now, I know they'll be able to print money to pay those bills, because that's what they've done the whole time, increasing the supply of that money. But what if there's a form of a soft default where people, like in Venezuela, just say, I don't take this paper money anymore. As payment, it's worthless. I need insurance on that scenario. That's what Bitcoin is for me. A brilliant young man from Brazil, Rafa, has my intrinsic value of Bitcoin calculated on NakamotoPortfolio.com. Real time. I can tell you under various scenarios that Bitcoin should be valued at least 400,000 US dollars per Bitcoin using that model. And it's trading at less than 1/10 of that amount. Okay, it's trading at about 1/15 of that amount if we had to do the math. The point is, I like to buy cheap insurance, and Bitcoin is extremely cheap insurance on the fiat Ponzi.